Recently, there was a huge influx of comments, DMs, PMs asking me on all different social media platforms, on my Instagram, on via Facebook, or even via my own Discord channel, about the age-old question on Chinese stocks. Should I double down or GTFO out of all the different Chinese equities? So before I start, I did create a Discord channel, so it's everything related to Alibaba. So for all you bulls and bears out there, you guys are all welcome to join this entire open community. I believe everybody right here is extremely friendly. And for those of you who want to put forth different arguments, you want to discuss, you want to dispute, or you want to even debate any certain kinds of issue, both in the US and China market, you are open to do so. I think everybody will be happy to listen to your viewpoint. So if you are interested, please click in the link in the description box down below to join the entire Discord server itself. On top of that, I've left my referral link for both Tiger and Moomoo brokers. They're essentially both a brokerage firm from China, and right now they're aggressively expanding in the entire world itself. So for those of you who are interested in getting an Apple share, I think the promotion runs till the first week of August. So for those of you who haven't get your free Apple share, what are you waiting for? If you would like more details regarding the entire promotion and referral rewards, please feel free to reach out to me on both the Discord server or just on the YouTube comment section down below. With that, let's get right into today's topic. This is a very interesting question because when put in different contexts, it yields very different results. If you were to go back to the March pandemic in 2020 and ask me, should you be doubling down or should you wait on the sidelines and sit on the fence and see how things are going on, and then start investing your money? At that point in time, nobody really knows about the extent of this pandemic and how it will reshape the entire dynamics of the world. And also, nobody would expect such a V-shaped recovery. And more importantly, nobody would also expect that the Federal Reserve or the US government will start printing trillions and trillions of dollars to resuscitate the entire economy. So now, looking at the entire evolution on all the different Chinese stocks, we all started out with the Didi scandal, where it pushed down quite a lot of Chinese stocks particularly. And on its way to recovery, then came the entire tech saga and essentially brought down all the different Chinese stocks across the board. So I'd just like to qualify a few things. Number one, this is not investment advice. Anything that's said on YouTube shouldn't be treated seriously, honestly, because a lot of people out there have vested interests. So like myself, for example, I'm definitely already invested in Alibaba, and quite a substantial amount of my holding is in the company itself. So if you were to ask me, of course I'll encourage you to buy Alibaba. But is it at this price point or whether is it now? I'll tell you about it later. Secondly, I think that this entire negative sentiments surrounding China, it's a very emotionally driven and emotionally charged one. When emotions come into play and when emotions come into the market, nobody really knows when this will stop. And very good example would be in the 08 crisis, where people thought everything was in the end of the world. Nobody expected banks to even have the ability to default and the ability to fail. They're so big, who would have imagined something like that to happen? When the fear sets in, when uncertainty starts going into the entire market itself, that's when you see people start throwing all kinds of good stocks, all kinds of good companies, despite being fundamentally strong. And lastly, I think rather than talking about just fundamentally strong companies, because I think a lot of the viewers, despite being bears or bulls of Alibaba, can recognize one fact: fundamentally, Alibaba is a strong company, but a lot of all this different risk premium that's added onto Alibaba share, or in particular any kinds of Chinese share or Chinese equity, is the different risks involved when investing into Chinese stocks, because many claim that they don't follow by the same rule of law or the same system or the same regulations like all their different counterparts. Now, if we take a more holistic approach in trying to tackle all the different problems, let's not talk about the fundamentals of the company, because we all can recognize the fact that it's a very strong company. Let's talk about the different fear-mongering climate right now surrounding all Chinese stocks. And the Chinese government is the centerpiece of all this fear, uncertainty, and doubt. So firstly, they started off cracking down all the different tech regulations. They came down hard on Tencent, they came down hard on Alibaba, they start launching different investigations and then resulted in the Didi scandal. Next step, you can see that now they're trying to do social engineering policies. They start stepping into the toxic tutor culture. They wanted to cancel all these different ad tech companies because they realized that, hey, they are having a disproportionate amount of influence in the future generation of China. Next up, you can see that in this entire roadmap itself, do you think they'll stop here in edtech? I highly doubt so. It's probably a multi-pronged approach. They're probably already looking into areas like gaming, for example, which also have a disproportionate influence on their population itself. Am I insinuating that Tencent is next on the list? Absolutely not. And that will definitely be the last on my wish list. If you were to really look at these two economic powerhouse and these two major economies in the world right now, one is trying to resuscitate the economy, trying to print trillions and trillions of dollars to meet their debt and to essentially just trying to encourage people to go back to normalcy. Yet at the same time, the other is trying to do an internal crackdown, trying to make sure that they iron things out, trying to make sure that the population is going as they are planning to. So it's a different approach, different system, different nuances as well. Although I have to admit that despite both countries running two different systems, working perfectly fine and normal as of now, as a skeptical investor, you are supposed to postulate forward because investing is always a prediction game. And just look at these two major economies and two major policy making decisions and philosophy. Think about where the trajectory of the country is going and ultimately the economy, and which is by default all the different companies in the country as well. So that's just a food for thought. For those of you who are extremely worried about the negative sentiment surrounding all the Chinese companies, if you would like to sit on the sidelines, I would encourage you to continue monitoring the stock. We are probably not in the rush of trying to get into all these different Chinese stocks because, like I said in a lot of my Discord chats and a lot of the comments in the comment section down below, I'm not confident that we have bottomed out of this entire negative market sentiments. So will we see a day of Alibaba breaking 198, going to 188, 178 or 168? Why not? Nobody is claiming that it's illegal for Alibaba to go 150, even though I might say that it's illegal, but who am I? I'm not any Chinese regulators or Chinese government. The entire idea of investing is betting on your money on different companies or specific ETFs or whatever, betting on the economy. And nobody's gonna hold your hand, cuddle you and tell you that, hey, don't worry, buy Alibaba at 198. We'll assure you that the minimum price is 198. Who is going to promise their counterparty risk? No one. So you do your own investing. But for those of you who are interested in starting a position, honestly speaking, I think it's a good time to start, which is also why I've always been preaching. Have a proper strategy when you go into the stock market itself. Don't let your emotions take over. And especially during negative market sentiments, it's the best time to continue adding into your position. Because always remember in the stock market, it's a reverse psychology. The lower the price, the lower your amount of risk. The higher the price, the more skeptical you should get and be wary about your own investments. With that, I hope you gain some value from this video. I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.